ratio analysis. Right. What is the ratio? What is the ratio? Ratio का क्या होगा? Ratio का क्या idea है तुमका? What is the ratio? Ratio का क्या we logically combine two variables. Initially, what happens in the ratio? We logically combine two variables, right? And by combining two variables, we develop one single answer. So that is what we mean by ratios. We logically, in a logical way, we combine two variables. It may be either both variables from profit and loss statement. In some cases, both variables from the SOFP. So in some cases, we combine SOFP details and profit and loss details. By combining those, we develop a single information. Understand? So that is the meaning of a ratio. You can present ratio sometimes as a percentage. In some cases, we show that as a sort of times. How many times, right? And the ratios can be presented in different ways. Understand? Sometimes we present that as a fraction, 1/5, like this. So then there are different ways of presenting ratios. Initially, what is the importance of ratio? By just referring accounts, the values, you may not able to make some decisions than using ratios. Understand? Using ratios is much effective and efficient for communication purposes. Other ratios which we usually use for communication purpose and decision making purpose. Now maybe then go. Business A and B. Profit taker. A के profit taker 5 million. B के profit taker 2 million. May values business A is more profitable than business B, right? As the raw information, this is greater than this, right? But the ratio means just an investment. For this business, our investment is 50 million. But for the second business, the investment is only 20 million, 10 million. Now, if you calculate the ratio, to get this 5, your investment is 50. As a percentage, it's 10%. But when it comes to this business, your profit is 2 million, investment is 10 million. As a percentage, it's 20%. When you consider the amount, 5 is bigger, greater than 2. But if you compare, if you present this as a ratio, right, for decision making purpose, profitability potential of business B is 2 times when compared to business A. Understand? So that's why we say calculating ratios, so making decisions based on ratios are much effective and efficient than just using raw information, raw details. Understood? So this is one of the reason for using ratios. And the ratio analysis is also, it's not a simple lesson. For advanced level, this is just given for 10 marks or something, but after advanced level, so when you are doing some professional courses and universities, ratio analysis is a subject. Just remember, right? In Jaipur University, I remember in final year, ratio analysis was a subject which we have studied for 6 months. In Jaipur, in the second year, in the final year, I remember, which was called as the financial statement analysis. The name of the subject is financial statement analysis. We analyze financial statement based on ratios. Therefore, the ratio analysis is just not a simple lesson. It's a subject at all. Understand? Therefore, this is used for many forecasting also. Say by analyzing ratios, you can forecast some future trends also. So, as an example, there's a ratio. That ratio always shows a sort of increase. So, with that we can forecast, right? So, when you take the ratio of the last 20 years time, that has a sort of line like this, right? So, with that we can forecast if the same pattern supposed to be continued on next year also, we will be move there. So likewise, we can forecast some trends of the business, and by analyzing ratios, sometimes we can identify some hidden relationships. So what are the relations which are which exist in financial statements, right? By just referring the information, you won't get it. But if you analyze, so this is called as a ratio analysis. In auditing also, say as auditors, so when we get an audit, initially auditors do something called analytical review. Say if I am an auditor, when a client comes and asks whether you can do this audit, right? Just after accepting the audit, what we do is we just take the financial statements which are prepared by that business. Understand? And we calculate so many ratios. With that, we try to understand what are the areas where some errors or frauds may be there. By just referring ratios, we can come to sort of judgment, sort of idea, this area may be problematic. There's a possible irregularities or frauds with respect to this area. By referring the ratios, we can do that. But by just referring the raw details, we can do it. I'll take a very simple example. Say as an example, say there is an industry, there's a business. Just assume that is a vegetable shop. Say it's a vegetable company. Say as a big one, right? It's a business which engage in wholesale vegetable buying and selling in Colombo wedding market. See, right? It's a big one. It's a company. Okay. Then, as I know, there are around 100 wholesalers in Sri Lanka wedding market. Around 60, so that much, right? Even though you don't know that, but their profit is very high. Okay. Their daily profit is around 5-6 lakhs. No, sometimes beyond that. Okay. Day profit. You better go and start vegetable shopping, but you are not allowed. There's a sort of monopoly in what they do. You are not allowed to enter into that wholesale market in that market, right? Right. I have some friends, that's why I know this. Right. Listen. So look at it. Say as an example, right? One of these wholesalers just came and asked me whether you can do this audit. See, as the auditor, I accepted that, and I just calculated some ratios. Initially, I calculated this analytical review. Say as an example, when calculating the gross profit ratio, I take that as the example because you all know how to calculate the gross profit ratio. How to calculate the gross profit ratio? Gross profit divided by sales into 100, right? Say, assume the gross profit ratio of them, say with the experience I know that should be over 60%. See, as an example, gross profit ratio of them should be around 60%, right? But when I take the seller, the merchant who came at me and asked to do the audit, when I calculated the gross profit ratio, it's only 30%. So by just referring the ratio also, I understand it's impossible. I'm not going to say impossible, it's hard to happen because with the experience I know. Otherwise, say I just take the financial statements of all such companies and I just calculate that gross profit ratio. So when I calculate the gross profit ratio of other competitors, it's always in between 50 and 60%. See? But when I just came to those who came at me and asked to do the audit, their gross profit ratio was only 30%. So when I start audit also, I know it's not practical, right? If the GP ratio of all such businesses is in between 50 and 60%, right? It's impossibly to be. This is 30%. So I start the audit with the sort of suspect. There are some possible errors or mistakes or irregularities somewhere. Then as auditors, we know what is the place where should I go and search. Understand? So then, with ratios, we can come into some sort of judgments. Understand? So that is what the importance of using ratios. Clear? Now, in our syllabus, the ratio analysis, we categorize ratios into some different categories. Specifically, we are having 5 types of ratios to calculate. In our syllabus, in advanced level, there are 5 types of ratios to calculate. What are the 5 types? එකක් තියෙනවා liquidity ratios. Liquidity ratios. The second type is profitability ratios. Right? Then there are leverage or gearing ratios. Gearing or leverage, the same idea, right? Then activity ratios or turnover ratios and investors ratios. These are the 5 types of ratios, right? We have to discuss in our syllabus, right? Each category has some ratios to calculate. So under liquidity ratios, current ratio and quick ratio. Likewise, there are ratios to learn. I will explain everything with the logic, right? So otherwise, I can just give you the ratio and I can ask you just go and study, but I will explain you the logic, how this ratio has come. Understand? So these are the types of ratios we have discussed according to the syllabus. Understand? Let's do a little more on that. Try it out. Ratios mean combining details in financial statements. Combining details in financial statements in a meaningful way. In a meaningful way. Ratios are used for comparison. Ratios are used for comparison of financial statements. Financial statements. Fresh line. Ratios can be categorized as follows. Number 1. Liquidity ratios. Number 1, liquidity ratios. 2, profitability ratios. Profitability ratios. 3, gearing, G-E-A-R-I-N-G, gearing ratios. 4, turnover ratios. Turnover ratios. 5, activity ratios. 5, investors ratios. Investors ratio के लिए market ratios. gearing ratio එක කවුද කරන්නේ lever ratio LVDTRH leverage ratios gearing කියලා ratios so these are the types of ratios අපේ මොනවද දැන් මේක උගන්නනකොට නිකන් රේෂියෝ එක පාඩම් කරගන්න බෑ. අපි රේෂියෝ එක හැම එකකටම කැල්කියුලේට් කරලා පෙන්නනවා. Write this simple example. Using this example, we can calculate the ratio for we can calculate ratios for using this example. Number. Not number is right. Following financial statements. Following financial statements are provided following financial statements are provided for the year ended 31st March 2024. So now the profit and loss statement. Profit and loss statement. For the year ended, profit and loss statement for the year ended 31st March 2024. Sales rupees 1000 rupees are sales 2000 cost of sales 1200 gross profit 800 operating expenses 300 interest 100 profit before tax 400 income tax 150 profit for the year 250 dividends paid 100 retained profit 150 retained profit 150 you are right SOFPs 31st March 2020 4 and 31st March 2023 property plant and equipment 3,500 or 1,000. Stock. $200, $300. Debtors. $150, $250. Prepaid expenses. Prepaid expenses. 50, 30. Cash. $300, $220. The asset side total here 4,700. $4,300. Stated ordinary shares. Stated ordinary share capital, right? $3,000. Just say not 3,000. 2,500, 2,500. Reserves. $500, $300. Bank loan. Bank loan. 1,000. $1,200. Creditors. $600. $150. Accrued expenses. $100. $150. Then additional information. Additional information. Number 1. Additional information number 1. The number of ordinary shares. The number of ordinary shares in issue. The number of ordinary shares in issue are 100,000 shares. Number of ordinary shares in issue are 100,000 shares. You understand that information? When you take the number of shares which are in issue in the company are 100,000. Okay. Next, number 2. Company works $360 days. Right? Per year. Company works 360 days per year. Okay. So this is the question. Then what I am going to do is I will explain each and every ratio. So with respect to those ratios, we'll do the computation using this. Understand? See the right? Calculate. Select. See calculate. Right.